The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and my pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. And you call in right here, 877-927-6648. My pleasure to work with you. Now, let's look at what's going on. The E-minis, up, down, and everywhere. First of all, down, up, down, up. So we're looking at the E-minis at 1.75 in the S&P at 280. The high today was 282. The low was 279, I think. No, 260. What was that? Where am I? 268.78. Right there. 268.78. And I said to subscribers to my opening call, yep, we can expect a rally today. In fact, I expect slightly higher close. Didn't seem like it for a couple of times during the morning, but we'll see what happens. Now, I did Larry's show a little earlier on. I was just unable to make that hour, and I did the hour. And I did a couple of things. I wanted to show the Chapman wave methodology in its simplicity, that you go from the lowest, most identifiable low bar, this is the E-mini, made a low today at 2,068.75, a double bottom low, one at 6 o'clock, and then the retest at 6:20. Then started to move to the upside. And every one of those bars is leg A, leg A, leg A, leg A, parallel high, leg A, parallel high, leg A, parallel high, and then plop. Right there, it becomes a peak at 8:10 this morning, Eastern Time, with a high of 2,077. Pulls back, and it rallies. It rallies to a slightly high, 25 cents, but that's a higher high, and it goes to 2,077.25, peak B. Pulls back. The identification, the objective in the Chapman wave, the simplicity of it is uncanny sometimes. You try to identify the lowest, most obvious low bar, and from that you merely count each successively higher high until you get to a peak B. If it pierces that B and goes right through to a C, that's good, because what it says is a real good chance you're going to get your buy signal to buy mode, which takes you to leg D and then a peak D. Lo and behold, what was the high that we were looking for? The high was at 2082.00, made at 20 to 4 Eastern Time on the 9th. Eastern Time on the 9th. Wait a minute, was that the 9th? Oh, that was this morning. That was this morning. And then kaplop, it went all the way down. Well, we identified a particular bar for the left side, right side price time match and said that by 11 o'clock this morning, it should be testing 2082. Based on the Chapman wave inside wedge, that dashed pink line right there, and the left side, right side price time match. Lo and behold, as I was doing the show, we had gotten to the B and then we started the C. I was drawing all this in. It pulled back from the dashed line, went right through it, went above, and went to 2082, the exact high we were looking for. Turns around, comes back down, fights at that inside wedge, rising trend line resistance, the pink dashed line, fails and goes all the way back down to 2070.75. And then there's some news-related rally just a moment ago, and it spikes up to where? It goes right to 2081.25 in exactly the time frame we were looking at. Isn't that nice? So that's the 10-minute chart to show the ease. And here's when I showed it with all the technicals, here is the 5-minute chart. I always say in the 120-minute chart, you are guaranteed to be able to look at many more peak Ds. They might go to an E, might even go to an F, but Ds are really the objective, and there are so many. And look, there's a D, pulls back. There's a D, sharp pullback from the 2082 level, plummets down to that 2070 area, comes right back and retests it. And there's a new pink dashed line that says that if everything works out, by 11:35, we should be testing the 2082 round number high that was made. We'll see. We'll just put it aside for now. We're done with that. All right. And the 120-minute chart is showing with the stochastic a nice positive divergence that there should be a bounce. I would suspect that we could have a bounce going into tomorrow morning towards the 2088, maybe 2090 area. And then you've got to be careful again. That's the way I'm looking at the market. Now I'm going to make this smaller because we want to do the other indexes. So let's do them one at a time here. You've got the Dow up 16 at 17,783. Nice attempt at a turnaround right here, right there. Why? Because the stochastic, which I had said to my subscribers, we've been looking when it was up there in the 60s. I said 50s or 60s. I said I'm anticipating that it goes down into the double digits, into the teens. And then we should see a move into the single digits. And at that point, we could get a pretty nice rally. Here's your low G, A, B, C, F, G. This is a G/C right here. You got a nice positive divergence. The Dow needs to break 17,826 to start getting above the 9-period moving average in the 120-minute chart. But most importantly, if by the end of the day, and believe me, the tide has changed. We're going to low tide. The tide has changed. If we start to see a move in the Dow below today's low bar, I just don't think it's going to happen. But if it does, because when the tide changes, you tend to close towards the lows of the day. We've seen that for days now. That's why there should be a bounce. But if there isn't, that's just really negative. And then I'm anticipating that the VIX index will spike very much higher. This way, I think it's just going to pull back a little bit. I'll talk about the VIX a little later on. Let's go to the S&P SPX.X, 2081. Up $1.80 right now. It's gone to a leg C, unlike the Dow. A, B, C. Yep, a leg C, unlike the Dow, which is in D. This is in C. Also, the Dow went to a single digit in the stochastic. This is at a double digit at 12%. So yes, there could be a bounce right here to the 2087 to 2093 area. We'll see what happens. That's just the way I'm looking at this. That very important trend line in the weekly chart that is testing. And it's just the second day of the week. So this is going to be very interesting. There's that monthly, still good, but watching it closely. A close below 20. Is that 50? No, that's the wrong one. 20. Yeah, 50. A close below 2053 would be a first real negative sign in the monthly chart. Let's go on. QQQ helped or unhelped by Apple. It went right down to the 107.20. Was it 107? Can't find it right here. Give me. There's a. I need this. Sorry for the delay there, but yeah. So we've got the low today is 107.20. Yes, it was. Okay, nice bounce at 107.90. It's still down 29 cents. But there again, I like the 120-minute chart was showing. If I can just find that again. Let me get the 120-minute chart. 120, right there. Click. Okay, if I can get this 120-minute chart, it says, oh, that's quite far. 108.64 to 108.82 is really the area of the biggest resistance. If it can get there, that'll be a positive short term, but I'm not sure it's going to hold there. All right, meantime, IWM is a question in the den. Yep, the IWM is holding that triangle, that symmetric triangle support. It's gone twice in 3 days. It's gone under it and then bounced back above it. Now it's tackling the resistance area. If the IBM at 124.48 minus 34 is able to climb by the end of the day to 124, no, let's call it 125, 124.85 to 125.15. That'll be on a very short-term basis. That'll be a positive and certainly going to help the weekly chart. IWM. A question about IWC. Let's see if I've updated. I don't think I've updated. Oh, man, I've lost all the notation. I'll have to find it again. A, B, C. It's made a peak D if it doesn't make a new high today. The IWC is very important. It is the iShares of the microcap ETF. Oh, I'm gonna have to do that. Let me make a note right here. IWC. I used to have all these done, but I'm not sure why it's disappeared. That's okay. Doesn't take long to do. So IWC is holding very well. In fact, the microcaps, I would say there's a lot of buoyancy in the micro caps. They're looking. This is a nice looking chart, and that's one of the reasons why we have to go step by step, sector by sector, in terms of what we're shorting and what we're looking at positively. We do in the portfolio. Do we have longs? We do have shorts, and adding to the shorts. We did add today. Now let me just do this. I lost my concentration. Oh, New York Stock Exchange, NYA.X. NYA.X, right on the 200-period exponential moving average. It's amazing. When it got there before, it had a fantastic rally back in March between the 9th and the 12th, and then it ran from the 10,000, what is this? It ran from the 10,650s all the way to 11,248 and then 11,254. The peak G top, and now it's pulled back to the 200-period moving average. Is this the time that it's going to fail, or is this the time that it's going to succeed? The way I'm looking at the MACD and the stochastic, if the New York Stock Exchange is not able to get to 11,050 by the end of the week, but instead starts to retest these lows, that's not a good sign. But so far, it's got there, and it is holding. The weekly chart is a peak D, so this should be a deeper correction. And the monthly chart has got that leg C. It's the only other way I can count it. So that says, yeah, you should pull back, but you should not take out 98.86, the October low. And it's at 10,922 right now. So I'm thinking that we're going to have a pullback here when everybody gets really, really bearish in about 3 weeks' time. We start to make some kind of a bottom. I don't think it's that short. It's time more than price that we're looking at on the downside. But some sectors could get hit real badly. And I think that the biotechs, let me see what the IBB is doing. IBB right now is trading at 361.33, down 368, was down much more earlier on. We are short, and we're looking at it askance, as if to say, all right, we're just waiting for you to break 357 on a closing basis, because once you do that, what was the low today? 358. 357, that's that low there. Yep, 350. It needs to close under 357. You've all of a sudden got a confirmation of a change of trend. Upside is 363.50's resistance. Let's watch this real closely. You know, I did something for my subscribers this morning. I often do this. I've charts that we look at as study pieces. What the heck was Regeneron? Just an amazing company with absolutely fantastic drugs, etc. Well, I had said that it made a round number 540. Where is the price? 527. Is there something wrong there? Is there something I should know about? Control R. Get that data back. Hey, why is it not trading? What happened to Regeneron? Yesterday it had a round number 544 high. And Regeneron Pharmaceuticals is trading now at 527.07. That's right there. I don't know what's going on. I thought I saw it earlier in the day trading. Am I wrong? Somebody out there? Do you have Regeneron? Anything on Regeneron? No. Okay. Well, I do hear the music, and that's important. And as a result, I'm going to do this. Okay, there it is. There's the echo that I was trying to avoid. Yeah, I'll be back in a moment. Basil Chapman, Tiger Ignition's hour, up 6 on the Dow and unchanged on the S&P.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, here we're back. So Regeneron's been halted. Endocrinological and Metabolic Drugs Advisory Committee of the U.S. Food and Drug Administration, FDA, meeting today to discuss the company's biologics license application, BLA, for Praluent, alirocumab injection. Yeah, I heard about that. All right, well, we'll see. Meantime, back at the ranch, let's look at what we wanted to look at here. We're going to go on. We want to look at a gold. And gold was up about $6 or $7. Now it's only up $2.60. Let's see what the dollar's doing. DXY. The dollar is, in fact, trying to rally. It's up 7 cents at 95.37. Maybe it's just a tad lower even at this current price. And yeah, the 120-minute chart's not great. I'm really surprised that just on a reflex action that gold hasn't done better with the dollar pulling back like this. And it's really telling me that my assessment, I wonder if I can go to it right now. Dollar TRCCI, if I remember correctly. Yeah. I haven't updated this, but this is the commodity index that I had been looking at for a long time. It is the Reuters Equal Weight Commodity Index, and it's sitting right there on the 200-period exponential moving average. The last time it got close, gave a great buy that went from the 350s into the 690s back in April of 2011. Now it's pulled back very sharply, and it's done that in a series of H patterns, lowercase h pattern, and it's sitting right on that support. I don't think it's going to hold. That's just the way it's looking. And I must say, if you look at gold in the long-term contract, look, It's under the 9-period moving average for months. It hasn't 1, 2, 3, 4 for 5 months. It hasn't. Well, the month is not finished for 4 months, and this is the 5th month. It hasn't been able to close above the 9-period moving average, which is just a little higher at 1205, 1207, 1205. So I'm looking askance at gold. I'm saying, what's going on there? And I think that I might be correct if my analysis about 2 years ago was when I see the gold stores, those little places that open up and say gold sold and bought here. When I see on a couple of the ones that I frequent, I go past. I don't ever go in. I should go in actually, but I haven't. When I see those with a for rent sign on the front, know that gold is pretty much at the bottom. That's what I'm thinking. Who knows? But I don't. Technically, I have nothing but more than a bounce in gold coming. But the more important thing is that I must be looking at it and saying, you know what? I need to just answer this very quickly. It's okay to come. There you are. Okay, so there you are. So the gold, right now we're looking at gold and it's at 1176, it's up only 260. And what I would do is this, I would put together with the silver, let me look at the SLV, no, let me look at the at SI continuous contract, at SI continuous contract. Yeah, it's just not good. I mean, silver got that A pattern. I drew it in right there, that A pattern. It just says real simply, the next level of support is 15.80. It's at 15.95. If it breaks that, it's going to test and maybe break the bottom of 15.595. Then it could have a pretty nice bounce because it would be matching some of the arch formations in the weekly chart. I just don't see anything yet. I wish I did. It's just, gold stocks are fun when they really, Tom always gets these when they're trading in 10 cents or 50 cents or $1.50 and they move exceptionally well. But I just don't see it right now. Maybe I'm wrong, but that's the way I see it. Okay, let's go on. We're going to want to look at crude oil. Look right now, crude oil is trying to rally. You see, this is the H pattern that is much more successful. And crude oil, as I said before, I don't see it going up really sharply, but I also don't see it breaking down. We had a call it the other day, and I said, I think that it's just stuck in this trading range and that it will go down later on, but at this point it needs to use up that very strong selling pressure that came in at the end of March. So that's kind of the way I'm looking at it. If I look at the, what am I looking at? I'm looking at, that's right, absolutely. TLT. A question from Doug wanted to know about the TBF, was it? So TB, anyway, I'll look at them both. The TLT is broken down, it's in leg, just call that A. I'm calling it leg B to the downside. And it looks like it wants to test the 114.72 200-period moving average in the weekly chart at this point because the stochastic's at 16%. I suspect it's going to go to a single digit, and the MACD is still expanding. It's not good. And I've got a sell signal with a down arrow in the monthly chart, and that says be real careful. It's gone right through what should have been bounce material. It came out of it right there. Take that away. Yeah, look at that. You've gone and you're getting into this consolidation area. So I think there'll be a lot of support in the 114s. And if I go to the weekly chart, you're in leg D to the upside, and it's continued into this week. If it hadn't, it failed, we would have made a peak D this week. But this way, it's extended it. It's leg D in the 10-year yield, the 30-year yield, and you've got leg C.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. And I just need to get this a little louder. There you are. Okay. We're back, and what I'm looking at here is I'm going to break just for a moment from the TLT and the TBT that we want to look at because, you know, we're all about techniques here, and I spoke when I did Larry's show at 9 o'clock and then right through to 10 o'clock, how we were looking at this particular pattern. And I showed a left side, right side, price, time. I showed the 10-minute chart going to a peak D. Well, the dashed pink line that we drew a long time ago with the measurement to the right side, which went right there at 11 o'clock at 2082, continues. And what did it do? It became the exact stopping point for the E-mini, right there. So if you're using any of these systems that give you timing, you know, like Daryl uses, look what you got. The 5-minute chart, I gave that pattern. Did I give it now or did I give it during Larry's show? I don't remember. But I showed the arch formation, and the arch it was during my show, at the beginning of my show. The arch formation, and it said right there, I gave the left side. Look, there's the left side. Let me put it in LS, and here's the right side, RS, right side. And I usually make this green. I usually make that green right there, make it green. Make this red right there, or pink or red. And right there's your midpoint. I call it the plumb line. There's the plumb line, blop, right there, okay? So it gives you an exact. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 bars down. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Bam, 13 bars to leg C. And that was exactly, you see, there's the pink down. I didn't make it pink, I didn't have time. There's the pink dashed line right there. It is a particular way that I teach how to formulate that. And bam, it goes right to that exact moment, 11:35. I think I said 11:35 earlier in the show. Anyway, right there. And now we're starting, we should be making, this could be, this can't be an alternate count because this low right there is below the low that started that buy mode over there. Once you go below that, this is completely fresh. This says you should go to leg D in the 5-minute chart. That's what it says, all right? So, and what we'll do is we'll extend this line because it's so critical, and that will be resistance. And the next resistance will be right there at about 2,083. What was the high so far? 2,082.75. So not much higher, but that will start to give you another little bit of a pullback. Let's see what happens. All right, get rid of this, put it on the side, get rid of that, put it on the side, and we're going to do this. We're on the TLT. When I look at the 120-minute chart of the TLT, which I'll have to now find, this is going to be very interesting because the 120-minute chart is like the rudder. It's the one that gives you the turn and the torque of the turn, but the real turn always has to come. Why is this still on the ESH? That's interesting. It should be on the TLT. Must have hit that by mistake. Oh, is this another one? All right, here we go. TLT. At this particular point, have I got another one? Give me 1 second. Sorry for if it's a little bit... I just need to double check on something. Oh, there it is. Okay. Activate. Oh, I knew it. I didn't want to waste time on stuff that I'd already done. Not sure why I've got two 120s over there. See, what we did was we looked at the TLT the other day, and I said it's got that pattern that I call the Eiffel Tower, straight up, straight down. Actually, let me change the color because I want you to see it as a difference. Make it this color there. No, that's not good enough. Make it this color right here. There. You see that A where you go straight up and then straight down. And now what's happened is that the TLT is coming into an area that should be an area of support. But the reason why I've called the daily only leg B instead of an alternate count is because in this particular instance, even though it's a D and there should be a little bit of a bounce, the MACD is flattened out and it maintains the previous signal. So that says it's maintaining the sell signal. And the stochastic's at 13%. I'm suspecting it might try to go to the single digits in a short while. A short while meaning in a couple of days. Now, what's really important about this particular instrument is that it broke the pattern that would have been a second H formation. And I suppose I could draw it in now, but I would have to deepen it. I'd have to say, I've got to give it room for the turn. And that, there again, takes you to the 115, 114 area. I think 115.20 to 114.80 could very well be an area that finally the TLT finds some support, which takes me to the, so the question Doug wants to know is, he's got the inverted one. It's the TB, I'm going to the TBT. It's actually the TB, I looked it up a moment ago. TBF was it? Let me see. Yep, TBF, which is just 200%. But that's okay. It's the same thing. You want the core, which is the inverse 1-to-1, which is, I believe, the TBT is 1-to-1. Am I right? Down, it's up 1.35%, and the TLT is down 0.71. Oh, so that's a comment. So maybe that's, I don't know. Anyway, the TBT is the inverted one that we use. I should remember. I've used these before. Just blanking out right now. Went right to the 200-period moving averages, running nicely. In the daily, it's calling this leg B because there's no H, and that's the only way I'd be able to get that. And it can't be a recycle. It can't be an instant restart, an unconventional instant restart, because that pullback under 46 was just way too deep. So I have to consider that it's in B in the daily, the TBT, the ultra short, Lehman 20-year T-bond treasury, and the inverted, the TLT, the Lehman T-bond fund, is on the way down. It's in the new leg, B to the downside. Okay, and that suggests that yields are going to go a little higher. That means I concur, Doug, that you got it as it broke the 200-period moving average on the upside, but that is still a magnet. The best thing is that the 9-period moving average has moved above, which gives you short-term, and it gives you the torque for a further move to the upside. The momentum is coming from the MACD, and that's saying, hey, I'm working real hard after the deep pullback to build the momentum, but I have got a fairly wide beta between the differential, 9-period differential, and the slow. The green and the red lines is expanding, and stochastics at 87%. That gives the weight at this particular time to the upside. Now I'm going to give you something that's a little different. This is leg D in the weekly chart of the 20-year T-bond yield and in the 10-year T-note yield. So what I'm looking at here is that there's a chance that not this week, but next week we start to pull back sometime next week. Whether you get still leg D or not depends on where we are on Monday. But at the same time, what I'm really looking at is that the history of this particular pattern says peak D was a failure at 34.19 in 2012. In 2013, it snuck to a D. It went to a D and then snuck to a little bit of an E. Not a little bit. It went to an E at 32.84 and then pulled back. Then it started brand new. It went to a B, C, and a D at 39.30. And that was in right there. That was in August of 2013. Pulls back, makes a cup formation, sneaks to an E, F, and a G. It wasn't a full A, B, C, D. It was just an E, F, and a G to 39.74, just a little bit higher. Then it fails. And it tries to run. It keeps failing, goes down to 22.26. That's yields going from 3.9 down to 2.2. That's amazing. Anyway, now it's back, and it's at 3.157. And it's in D. And I suspect that we will make a peak D, and then we'll make just maybe a nominal E or even an F, and then we'll start to pull back because the Japanization of our bond yields, I think, will continue. That means that bonds will go higher because I think the Fed is going to be fearing what I was talking about earlier. For my subscribers, what I had said was, if you're looking at the autos, look at the autos. Yep, they had great sales just recently, going into the last sales period. But look how they've pulled back. Ford's having a nice session, down up 11 cents. Not a great chart on the weekly or the daily. Look at General Motors. And that's been going on since back in the end of March, since it was up in the 1660s, 1670s. Pulled back. So this is a pretty big move for Ford. General Motors, same thing. Nice day today. But boy, it's at the 200-period moving average is struggling. And the weekly chart has broken support, but it might be able to squeak back in if we can get that from 35.28 to 35.90s or 35.75, 35.90 area in the next few days. 39 round number high. Watching closely, General Motors. What about FCAU? What about you see so many Fiats on the road these days. It's very interesting. Well, Fiat Chrysler, whatever they call themselves, Fiat Chrysler Autos, made a D in the daily and reverted back to the sell signal, not a sell, well, we'll wait for the end of the day. Not quite a sell mode yet, but the weekly chart is in a sell mode. And this is just a balance within that. So I'm looking at it and I'm saying, hey, looking out, Chrysler should do very well. I see Jeeps all over the show, even though they get such a lousy report in consumer reports, but people seem to love them. And I go past the dealership just about a mile away, and they're turning over those cars. So they must be doing okay. So back at the range, what we're looking at is that looking out, Fiat Chrysler should go higher in the monthly chart above 1708. When does it kick in? When do you start to see the autos move? What about the housing? HGX.X. Look at this chart right here. Look at that chart. PKF in the weekly. Now look at it. If I move this away, look what you've got. You've got the wood, which is iShares Global Timber and Forestry ETF, struggling, making a kind of a propeller shaft here. There's the shaft. Wait, there's the propeller shaft. There's the oval, the midpoint. And now you should see a pullback. If it closes under 52.50, it's at 53.60. right now, up 15 cents. If this weekly chart closes under that 52.60 area, it's really turned from a sell signal to a pretty strong sell mode. And that's the same thing with the HGX, the Philadelphia Housing Sector Index. Look at that, 230.02, and it's trading at 218.63. It's trading at 224.27 right now. That's a right shoulder failure in the Chapman wave. And if it turns down, that's a problem. Because if it breaks that, you've got the H pattern with lower right side implications. So I'm watching this one real closely. Question in the den. What about the SMHs? Well, the SMHs plunged. Having a bit of a bounce today is something we want, because I think that there's a lot of weakness in the SMHs. This is the Market Vector Semiconductor ETF. It has Intel, Taiwan Semiconductor, ASML, MU, that's Micron, Texas Instruments, some Applied Material, just a huge bunch. Oh, Broadcom's out already maybe, huh? So Marvell, Advanced Micro, Teradyne. Yeah, so that made a peak F. Now I can take that question mark away and say, hey, that is in fact a peak F top at 60.13. Love to have a bounce. I'd like to have a strong bounce, a bounce that takes it maybe to the SMHs, to the 57.40s, maybe even 57.64 9-period moving average, and then come down for the next leg down. That's the way I'm looking at it. This is a very critical period for the SMHs. Now, so weekly only in peak C. No, it's a peak C. Well, let me put it this way. The technicals are failing. The stochastic's still at 81%, but it is turning down. The on-balance volume's turned down. The all the highs that had been made at 56.64 back in December of 2014, the March high of 58.47, and then the recent high last month of 60.13 in June, last week, suggests to me, with the lower technicals on each one of those bounces, you got weaker technicals, that the SMHs have a little bit of a problem. Let's look at Intel INTC. Yeah, you see, there's that A pattern, the Eiffel Tower, straight up, straight down. It's a leg C, probably failure in the weekly chart. All I'm saying, I don't like the action technically. And although I've always said that semis have gone into the commodity aspect, there's still demand and there's still sales, etc. So I'm looking at it, I'm saying, okay, it's telling us a little bit about the economy. It's like the HGX, it's like the copper contract. I just got to think of it as yet another commodity, and it's pulling back. It's having a problem. So yeah, the question is, what about the weekly? I think the weekly is going to be a G. It could pull back, and later on we could have another very strong rally. We're watching it closely in the meantime. Then there was a question I had that I've made a big deal about, this Cintas, overalls, clothing, rentals, etc. We had shorted it just very briefly. It gave us a tiny profit and a tiny loss. We kind of, I think, break even on that. It made an 86.83 all-time high. It's overalls, clothing, rentals. This is what really was saying to me that there's some weakness in the economy. Not an all-time high, I'm sorry, the recent high, 86.83. The all-time high was 88.23. Let me just put that in so I don't, oh, there it is, 88.23. 88.23, and I just think this is a rebound in a sector that's been on fire, if you can use that for overalls and clothing rentals. And it's just had a big slowdown since March, and that's what I've been saying. Since February, March, I was detecting that there could be a mini recession unfolding. Hey, I'll be back. This is, the Dow's up 22, S&P's up 3, Basil Chapman, and we'll look at some of the indexes, some of the stocks in the IBD top 10.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So I want you to go through a couple of the, did I finish on Syntest? Let me just quickly finish on Syntest. Oops, I'm into the wrong place. Now I've messed everything up. That's okay. Here we go, CTAS. I don't know where that disappeared to. Okay, Syntest. So all we need to do is, it's at 85.51. If it starts to close on a daily basis underneath 84, then it's probably going to retest the low 80 area, that 79, 80 area, and then we can go step by step. At this point, it's still the rectangle formation, but I'm watching it real closely. A spike to a new high will say, hey, mini recession over? I don't know. But in the meantime, if the market is going down, it should go down as well. It's holding quite nicely right now. So those parameters under 84, be careful. Over 86.50, it says, don't even think of shorting just yet. It's going to try to retest that candle high of 88 in the 87 to 88 area. So here we go. Ambarella, AMBA. This is what I've got. Leg E extends. The MACD is still very strong. Stochastics at 93%. My thinking is that this is really a great looking stock, and that if it's going to do anything, it's going to do this. It's going to make a kind of a flag pattern and trade between 105 to 101 as a base, and probably 116 to 117 on the upside as maximum. But over the month of June, those are the wider parameters. But all I would say is that if it does start, leg D in the weekly, if it does close under 100 in the next 7 to 9 trading days, that'll say be careful. It could be taking a much longer and deeper correction. But in the meantime, it's a fantastic stock. Should only pull back 5% or something and then find some support and try to bounce around there. Our next one is Cyber, CYBR, number 2 in the IBD Investors Business Daily, Monday edition of the top. And this is E/C in the daily, making a cup formation. It's gone to a D in the weekly. I'd now be a little bit careful. It's a great, the whole sector, cyber sector is just fantastic. It's made a leg C up in the monthly. It should go to a D. I would put this on my buy list, but now I think you need a little bit of patience. That's the way I'm looking at it. We were going to try to get it, and we missed it, and now I said today, let's step aside. Ellie, I didn't even know that this was a stock. This is Ellie Mae. You got Sally Mae, you got whatever, and now you got Ellie Mae. Well, Ellie's made a peak D in the daily, made a peak F top back at 67 round number high. I forgot to type that in. 67, maybe I did, but it's not there. 67 round number high. And that could be an all-time high for now. But the monthly chart has got the pattern that I always call the rectangle formation. There it is. And that's what it's looking like. So it's in a trading band, narrow trading band between 67, say, with a round number. It could even go a little higher, maybe 68 if it goes higher. But in the meantime, it's just a little bit higher, maybe 4 points higher. But it also has 4 points, very good support in the downside. Stuck in a rectangle formation. So only a leg E, maybe a peak C. I'm sorry, peak C in the monthly chart, looking very strong. So that's a good stock. Some of these have got very nice patterns. CSM, did I do CSM? I guess not. All right, I didn't remember this one. I gave it a miss. Cambrix. CBM. It was a little too far away for me to see. There it is, CBM. I must look at it. Oh, peak F, just making a peak F. There's that rectangle formation. So the best stocks are making rectangle formations, and the worst stocks are starting to show signs of declining, and quite sharply in the weekly chart. Peak E in Cambrix core, trading at 41.20, down $1.94. So I'm going to put in the F so that you can see what I'm looking at here. The technicals are starting to deteriorate, but until it breaks 39, it's got some support. A break of 29, and it's in real trouble. All right, that's it for me, folks. Stay tuned. We've got, let's see. I said Steve Rhodes coming up at noon, but he comes up at 1. So we've got a repeat program. Have a great day. I'll see you later on this afternoon.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,